An introduction to options, and I am Danny Dobris. Let's jump into this. What is an option? An option is a contract. It gives the buyer the right, but not the obligation to buy or sell an asset. It has a specific price and date, and just like a stock or bond, an option is a security. And it is a binding contract with strictly defined terms and properties. Now, if you're feeling a little bit confused, let me show you an example. Let's say you want to buy a house, and the house you want to buy costs $200,000. You may not have $200,000 right now, but let's say in 3 months, you will. The seller agrees and says, okay, I could wait 3 months, but it's going to cost you $3,000 to do that. And you're happy with that, and you pay him $3,000, so that way in 3 months, if you want to, you will buy this house for $200,000. In the meantime, 2 things can happen. First, you find out that the house once belonged to Elvis Presley, and the market value skyrockets to $1 million. You stand to make a profit of $797,000. Market value $1 million minus the price of the house, $200,000, minus cost of the option. It's going to equal $797,000 profit. Now, the second thing that can possibly happen, you discover the walls are filled with asbestos. It's haunted by Jack the Ripper, and there are super strong squirrels living in the attic. Your house of dreams is now worthless. But since you purchased an option, you have no obligation to purchase the house at this time, but you do lose the $3,000 for the cost of the option. The 2 important points are, as a buyer, you have the right but no obligation to do anything. And an option is merely a contract that deals with an underlying asset. In our example, the underlying asset is the house. When you're trading, the underlying asset will be the stock or an index. Now, there are calls and puts. A call gives the holder the right to buy an asset at a certain price within a specific period of time. And calls are similar to having a long position on a stock. A put gives the holder the right to sell an asset at a certain price within a specific period of time. Puts are similar to having a short position on a stock. People who buy options are called holders. Buyers are said to have long positions. People who sell options are called writers, and sellers are said to have short positions. Here's some of the lingo that you're going to be hearing. The strike price, now that's the price at which an underlying stock can be purchased or sold at. Expiration date is the date when an option expires. In the money, if the share price is above the strike price, it is considered to be an in-the-money call. If the share price is below the strike price, it is considered to be an in-the-money put. Intrinsic value, that's the amount by which an option is in the money. And premium, well, that's the total cost or the price of an option. The price is determined by factors that include the stock price, strike price, and the time remaining until expiration and volatility.